All right, calls of the day. IBM, that's where we're starting today. Price target gets to 185 at Bernstein from 165. A re-rating, they say, has been driven by improved operating performance and competitive positioning, broader market tech stock appreciation, and recently, potentially, some AI, what they say, pixie dust. New 52-week high, highest since June of 13, 6 straight month of gains. Belsky owns the stock.
We like it. It's in our value portfolio. It's in our dividend growth portfolio. Cash juggernaut continues to increase the dividend. We're going to continue to own it.
Okay. UnitedHealth, top pick, B of A. Reiterated a buy there. Price target maintained 675. Jimmy, they say they were overly penalized on by that DOJ news that came out, what, about a week ago or so?
Yeah. Well, let's start with they've been penalized heavily, and not just by the DOJ, but also the medical loss ratios, which have been creeping up for all of these healthcare providers. Bottom line is, I think, too much penalized, so I agree with the call. At roughly 17 times this year's earnings, this is a stock that traditionally has traded above 20 times earnings. It is a high-quality company in a space that's going to be growing. We know that as people age, there's going to be more need for medical insurance, so I think this is the right time to be buying it.
Even when theoretically, all of the air is being sucked out of the room by GLP-1 players, right? Like Novo today had great news. The stock's ripping.
Yeah.
You've had Lilly, which has been around a high almost every day, too, even though it, may pull back slightly on the Novo news today, but that's where the action seems to be.
Look, I think that's an absolutely valid point. But also, if you look outside of the GLP-1s, there are other sectors of healthcare that have been performing. Look at AbbVie, look at Vertex, look at any of a number of pharmaceuticals. I think it's just a matter of time, and frankly, soon, that the money's going to start flowing to these managed care providers.
What do you think, Belsky? You own this too, UNH.
Yeah, we do. We own less of it now than we did a year ago, given the problems, but everyone's way too overweight the drugs in biotech, including ourselves, but we've maintained this position in UnitedHealthcare mostly because of the dividend and the cash.
I think the stock is breaking down. If you look at a 5-year chart, it had substantial support in like the 450, 460 area. If you lose that support, this is on a multi-year. This is not a trading call. I think it tells you that something has materially changed here with the type of people who would normally come in and buy this stock on that dip. The fact that they're not all of a sudden, after repeatedly rescuing the stock at that level, I think you got to ask yourself, has maybe the story fundamentally changed, given that the buyers aren't showing up here anymore? So I would really watch that 450 area if it gets that low.
All right, we'll keep our eyes on UNH for that. How about Deere? Jimmy, added to D.A. Davidson's new, quote, gold trophy list. Well, price target 483.
I mean, I hope so. Look, in a portfolio of 25 stocks, got to be honest, I don't love all of them equally. I was passionate about Citigroup earlier. I'll be passionate about other stocks. I'm not as passionate about Deere. Now, let me be clear, folks. I'm not selling it, but I hate being so tied to crop prices and weather patterns. At this valuation, I think it's fair that we can hang on to it here, but I'm looking for that oomph. You're hearing the lack of enthusiasm, so stand by.
So you only like the stocks in your book that have gone up. This stock is down 6.5% year to date.
That's a fair point.
Let's call it what it is.
That's a fair point, and I think it's true for all of us. We do love our stocks when they're going up.
I felt like it was an obvious point that if it was up 6.5%, you'd be like, yeah, I really love this.
Listen,
great.
You know what, Scott?
What if they just put an NVIDIA chip in every tractor? Where would this stock be trading?
Wait a second. You're making an even better point, right?
Yes.
The reason to own this stock for the long run is
AI farming. What's up?
Is precision farming. I'm not making a joke. I mean, you're coming at it from a sense of humor, but actually there's reality there. That is the reason to own it for the long term. I just hate looking at crop prices. I hate it, folks.
But maybe Deere turned this into an ARR story, did they not? They turned the machines into subscription-priced vehicles that you now have to pay for like software.
Yeah, look, I'm not selling the stock, but I'm also not buying what you're selling.
Maybe it's not quite that.
You're buying these big, 100 horsepower plus combines, things that
I grew up on a farm on Long Island. It was a bagel farm, but still. No,
maybe it's karma. It's karma because, we call you Farmer Jim. And you don't own a Deere.
Oh,
you don't drive a Deere.
I was wondering as you were setting that up if you were actually going to go to Kubota. You got a good memory, Scott.
What kind of tractor? The yen
was really cheap. The yen was really cheap. Okay, this is like classic macroeconomics. Kubota won out over John Deere.
All right. Well, now sell high. Go for the Deere. The yen, right? Look what's happened in Japan.
I'm not selling the stock, and your point seriously about behavioral investing is well made. I'm not selling the stock, but I can't get all enthusiastic. I hate looking at crop prices.